What's up, traders? In today's video lesson, I'm going to be showing you a simple tool that you can use to increase your win rate. So stay tuned. So today's video is going to be a direct follow-up on our how to identify change of character, which we posted about 10 days ago at the time of recording this video. And it is essentially going to be the third lesson in our little mini series. All right. And if you go to the channel, if you head over to our playlist, you can see that I'm going to be putting all of these videos in our lessons playlist. So if you haven't already, make sure that you check out the how to identify a break of structure video and the how to identify change of character video, because the information shared in those two videos is going to be utilized in this particular video as well. So to start off, we are going to be looking at some theory, all right? Revisiting some of the concepts that we spoke about in the two videos prior to this one, just a little bit of a recap. And then we're going to hop onto the live chart. We're going to use the bar replay tool, and we're going to look at how we can increase our win rate using the simple tool that I'm going to be showing you in this video, right? So just a quick recap. In the previous videos, we said that essentially smart money trading is a trend following strategy where we are looking for high value areas to get involved in the market to follow the underlying trend. All right. So we said that the first part of that is identifying your external structure points. So on this particular markup, you can see that we have our external structure points mapped out in here. And up until this particular point in here, we can all agree that price action has been pushing higher. So we have been in a bullish state. All right. How do we know that? Because we've been putting in higher highs. Okay. And we've been putting in higher lows. Right. Now, after you've identified your external structure points, what you then look for is you look for a violation of those external structure points. And this is what's deemed as our break of structure. Okay. Now, after a break of structure, you wait for a change of character to signal that a new structure point or a new external structure point, swing point, has been formed, and that we can now start seeing a pullback from this particular structure point, right? And this is where our lesson for today's video begins, because after you have correctly identified your new external structure swing point and you've correctly identified the start of that pullback, what you then want to ask yourself is, well, where is the best area for us to get involved in the market to follow that underlying bullish trend, right? And that's why I want to introduce you guys to the concept of premium and discount pricing and how to now use the Fibonacci tool together with premium and discount pricing to really find those high probability areas to jump on the underlying trend. Okay, so if we just quickly break down what premium and discount pricing is, we can use a very simple, very generic worldview analogy, right? So if you think about life in general, whenever you're looking to buy something, whenever you're looking to sell something, you're looking to buy something at the cheapest price possible, and you're looking to sell something at the highest price possible, because as a buyer, you want to save money. And as a seller, you want to make as much money as possible, right? And that's what premium and discount pricing is. Essentially, premium pricing refers to an area of the chart in the context of the underlying trend and in the context of the underlying market. It's an area of the chart where we can comfortably look for high probability areas for sells, okay? And generally speaking, your premium pricing is going to be above your 50%. So everything above your 50% is going to be referred to as your premium pricing zone. And then from a discounting point of view, it's essentially everything below your 50%, where you can look for now high probability areas to buy the market. So essentially, you're going to be buying the market at a discounted price if you're looking to buy, if you're looking to go pro trend for a bullish trend, and you're going to be looking to sell the market at premium pricing if you're looking to go short. Okay. If we come to our little markup here, what we can see is that after our break of structure to the upside, we have a new external structure swing point that has been formed. Obviously, we've utilized change of character. What we then can do is we can bring on our Fibonacci tool, okay? And then we want to mark out our most recent swing low as well as our most recent swing high. And then essentially everything above our 50% will be referred to as premium pricing, and everything below our 50% will be referred to as discount pricing. So because we are bullish overall in the context of this particular market, we don't want to be looking for any buys above this particular 50% line, which is referred to as our equilibrium. We only want to be looking for buying opportunities within this particular zone here, which is referred to as discount pricing. And essentially, if you have a valid demand zone within discount prices, that's where you then start looking for, some other confluence factors, such as liquidity. That may be double bottoms. It might be session liquidity, whatever it is. You've got liquidity, you've got imbalance, you've got a valid demand zone. It sits within discount pricing, and then this becomes a high probability area for us to get involved in the market to then either target the weak high, essentially, because this particular high failed to do its job. It failed to break here. So we can then target this particular high as an initial target, or we could then look for, any other previous demand zones, or excuse me, any other previous supply zones which are not mitigated yet. All right. So simply put, that is premium and discount pricing. Another thing that you need to note is your price won't always come below your 50% if you're looking for buying opportunities, because sometimes there's so much volume in the market that price action may stop short. So after forming your new external structure swing point, you may see price action stopping just short of your 50% line and then continuing higher. And then that has all to do with the amount of volume that is in the pair. All right, that's the amount of volume that is being traded at any given time. So after this particular break of structure, we have a new higher low in here. Obviously, price action is reacting from this particular order block. What we can then do is we look for another break of structure. After that another break of structure, we wait for the confirmation of a new external structure swing point. Change of character can help us with that. And then it's quite simply a case of drawing on your Fibonacci tool to then look for those high value areas. Okay, so you may be asking me now, well, how do we know which swing points to utilize to draw our Fibonacci tool? And a basic rule of thumb is you wait for your break of structure. Okay, the external structure swing point that led to the break of structure will be the first point for your fib, the first anchor point for your Fibonacci. And then after your new external structure swing point has been formed, after that break of structure, that will be your second anchor point for your Fibonacci. So essentially, you're going to be trading within this range, right? So this is going to be the range that you're trading within, and you want to bring on your fib tool, and you want to go from this particular swing up towards this particular swing, and then everything below your 50% is where you're going to be looking for buying opportunities. All right. Now, just a quick little nuanced aspect of price action in general is a lot of times what you want to look for when you're looking for a break of structure is you want to look for a break of structure with a lot of conviction, a lot of volume. After the break of structure, you want to see price action continuing up a little bit more before that new swing point is formed. All right. When you have a break of structure like this, where there's not a lot of volume breaking the structure, and your confirmed swing point occurs very soon after your break of structure, this is often a sign of potential weakness. And it is often an early indication that we could be seeing a potential reversal, because you can see in here, after this particular break of structure, price action pulls back very quickly. We create this new lower high, and then we break structure. Okay. And then what that does is it means that we are now playing within this particular range, right? What you then want to do is you want to bring on your fib tool and you want to start looking for now premium prices. All right. So remember, when you're bullish, you want to be looking for discount prices. When you're bearish, you want to be looking for premium prices. And that would now be a high probability zone for us to look for sells to continue with this particular underlying bearish trend now, because we've seen a trend change in here. But let's hop into the live charts now and let's look at some live examples that we can use to best explain this particular concept. Okay. All right, so we are on USD Swiss franc. We're going to start off on the daily chart here. I've brought on my bar replay tool and we're going to start off price on the 29th of September 2021. So feel free to head back to this date if you want to replicate what we're going to be discussing in this video now. And very quickly, we can all agree that price action, we were in a bearish state until price action broke structure here. Okay. And then we pushed down, we essentially created a new higher low in here, which means that after this particular break of structure, we are then playing within this range here. Okay. So if we just actually mark that out as external structure, we can see that we have a swing low in here. We can see that we have a swing high in here, and we have a valid break of structure in here. And it means that we are playing within this particular range here. So as you can see, everything below our 50% will then be regarded as high value areas for bullish continuation. And that's essentially what we get, because if we just quickly investigate it here from a daily point of view, we can see that we have a really nice daily supply zone in here that price action obviously interacted from. All right, so we've seen a reaction from a daily zone in here, which sits within discount pricing, remember, below the 50%. So from a market structure point of view, after this particular break of structure, we can then anticipate that this particular high is going to fail. Why? Because it failed to take out this low. All right. Now, from that aspect, let's just do a quick markup. We can clearly see that we have another valid supply area in here that we can then identify in terms of what price action is doing right now. And what I want to do is I want us to just play price forward now from a daily point of view, just to see what price action does if price action comes in to mitigate this particular supply zone before dropping down to the 4-hour, right? So we're just going to play price forward just a little bit here. And what we can see is price action has pushed up, right? It did not quite reach our demand zone, but it's already giving us indications that there's a potential change of character occurring here. So remember what we said during our theoretical part of this video. We said that as soon as you have a break of structure that is quickly followed by a reversal, it is an initial indication that we could be seeing a potential trend change here, right? So if we just play price forward a little bit, we can see the price action is now starting to hover. And then what we have is we have this. So in here, we've essentially got a valid daily change of character, which has just taken place in there. All right, can you see that? Because price action after this particular break, there was very low momentum that broke this high, and soon after breaking that high, we had a reversal and our daily change of character was confirmed here, right? So what we can now do is we can now drop down to the daily, because to the 4-hour, because we can now see that we've had a daily change of character, even though this daily change of character has seemingly not interacted with anything significant on the daily. We can now drop down to the 4-hour and we can look at what exactly has transpired on our lower time frame here. Okay, so if we look at the 4-hour context now, we can clearly see that we've had our daily change of character that has occurred. But remember, your daily change of character is going to be a 4-hour trend change. And in terms of the 4-hour, what we have is we have a valid break of structure in here, which originated from this point here. So that means that the range we are playing within is going to be this range here, from this swing high to this swing low. And what we can then do is we can draw on our Fibonacci tool. We can anchor it from this point here to this point here. And then essentially we've got a nice indication of what our discount pricing is. And we've got a nice indication of what our premium pricing is, all right? So when performing your analysis, after you've identified your premium and your discount pricing, what you want to do is you want to identify any valid supply or demand areas, in this case, any supply areas that we can start looking for potential sales from, okay? Because remember, in the context of this market now, what we've seen is a daily change of character, a 4-hour trend change. Everything is pointing towards price action pushing bearish now, all right? So notice how after forming this particular new lower low, price action pulls back and it already taps into our 50%, right? So it has already pushed into premium pricing. Even though it has not mitigated any significant supply zones, it has tapped into our premium pricing region. So price action could very easily, just from this particular movement, price action could continue down, especially if there is a lot of volume in the market, all right? So all we can do is we can just identify this particular 4-hour area as high probability, but realize that price does not need to get here. It's just an extra confluence that we're adding to get involved in really high probability setups to increase our strike rate, right? To increase our win rate. So what we're going to do now is we're going to play price forward just a little bit to see what price action is going to do, because we've already had the pullback that came into premium pricing, but we can still see that there's a little bit of imbalance that's left behind. So let's continue playing price forward. We can see that we now come back up, and then this is significant. Notice how price action now pushes back in. It taps and mitigates this particular 4-hour zone. And we can now comfortably say that we have reached a high probability zone, probably the highest probability zone that we could reach for continuations to the downside, right? And then after that mitigation, what does price action do? We get a really strong bearish reaction. And then if we just now let price action play out, we can see that price action after that mitigation has now continued down lower, all right? So you can see that we just come in and sweep this particular low in here. And what does price action do? At this point on a lower time frame, right, this little sweep could be a significant break of structure to the downside, okay? And then what you can then do is, maybe let's say on a 1 hour or on a 15-minute, you can then pull up another fair value area. So if we just delete this initial one to clean up the price, what you can then do is you can say that this is now the new range that you're playing within. And as you can see, price action pulls up, it pulls back up into this particular zone in here, okay, which is also a 4-hour. It might be a lot cleaner on your lower time frame. And then after you get the mitigation of that zone, which sits within premium pricing, what you want to do is you want to look for continuations to the downside. And as you can see, again, after that mitigation, a lot of bearish momentum comes in, price action pushes down, and it continues in the direction that we anticipate, all right? So we have another break of structure in here. So if we just pause it now, so we have two setups that played out really well. If we just pause it now, what we can then see is we have another break of structure in here. So let's just mark those ones out. Once you've gotten this particular break of structure, you look for where that break of structure originated from, and it would be this point in here. And then you look for your, essentially you look for your new lower low, which then means that you are now playing within this particular 4-hour swing because we broke structure in there. And then it's quite simply just a case of bringing on your fib tool, mapping out your premium and discount pricing. Because we are still bearish overall on the 4-hour, we are essentially looking for high probability areas to continue with that underlying trend. And obviously the one that stands out most to us would be this 4-hour extreme zone. in there. We mark that out, and then all we do is we then look for price action to come into discount or into premium pricing and then give us a potential reaction. So you see how in this particular scenario, what does price action do again? Price action only interacts with this low probability sell to buy wick, right? It only interacts with this particular zone, which is fairly low probability in the context of the price, the time frame that we're playing within, right? So we had price action push up, and what you'll see is price action after going into discount pricing, into premium pricing, we have a sharp push down. So at this point, the particular level, the particular zone that you identified was never mitigated. Price action ended up interacting with a slightly lower probability supply area in here, which is a lot cleaner on the lower time frame. But this is a very nice example of how price action won't always come to the area that you've identified, because as soon as price action enters into premium prices, it wants to sell off. And that's the only thing that you should essentially be looking for. So in this particular case, you probably miss a trade if you're looking to just trade your 4 hour, right? And that's okay. When you're trading, it's all about understanding that you just want to identify high probability areas. Okay, so what do we have then? We have another valid break of structure, and I think we're just going to do one more here. So we have another valid break of structure in here to the downside. Now, where do you map out your swing high, your most recent lower high? After this, you do have a little bit of reversal in here. So some people would mark it out here, some people would mark it out here. I think the one that probably makes the most sense for me would be this one in here, purely because after this swing point, we don't have a lot of volume that comes into the market. But after this particular swing point, you can see the dramatic drop off in price. So what I would do is I'd mark this out as my particular external structure swing point. We can then quite comfortably mark out this particular 4 hour as a supply that we can then look for. And then it's a case of waiting for that confirmed new swing point. And look how price action immediately taps back into that zone. So this would have been our new structure low. Okay, remember on your lower time frames, you would have seen a nicer, you would have seen a 50-minute change of character followed by a 1 hour change of character, so on and so forth. So that would have been the swing that you're playing within. What you then do is you go ahead and you map out your premium and discount prices. You can obviously see that this extreme zone sits within premium pricing. And then what you want to now do is you then want to look for price action from here to dramatically sell off. And you can at least look towards this particular zone here. But now remember, this could easily be a scenario where price action gives us a reaction and then pushes higher. All right, it can happen, right? Nothing in the markets is guaranteed. All we can do is identify high probability areas. So if we just play price action forward now, what we'll see is price action then shoots up. We get the mitigation of the 4 hour. We get immediately an initial reaction. Price action comes back in to retest that zone. And then what does it do? It continues down, right? So just to quickly recap, whenever we're looking to get involved in the market to go pro trend, a very simple tool that you can use is the Fibonacci tool, using the concept of premium and discount pricing to identify high value supply and demand zones to follow that underlying trend, right? If you guys enjoyed this video, please make sure that you give it a like, subscribe to the channel so you don't miss out on any future content. I appreciate you guys so much for watching, and I'll see you in the next one.